This is Eric Muad with Mother.com with a weekend market analysis for September 28th and 29th, 2019. With about 1 minute to go before the market close. Markets are slightly down for the day off their lows. Let's take a look at those charts when we begin, as we always do, with the S&P 500. And we're going to begin here with the weekly. We can see after this week's action, the market is down slightly. S&P 500 is down about a percentage point. We can see here now that we can consider what it looks like based on the prior breakout attempt. And that level that we were watching was 3,025.86, which is this weekly closing high from the month of July 2019. So right now we can see and conclude that yes, there is the closing bell, and I'll show you the closing numbers here in a bit. And we can see here that the market is now pretty much practically showing that it is failing to break out. So it tried here 3 weeks ago, tried to break out last week, and this week is pulling away from that area. So of course, failed breakouts are notorious for taking instruments lower. So that becomes a little bit of a problem as far as the bulls are concerned. The only way to cure this is eventually the market finding enough energy to move above 3,025.86. Now, bears should be encouraged now that the market has given us this failed breakout attempt. And as long as that's the case, that's a reason to actually have some short positions in play because of that failed breakout. And the other thing we've been talking about is the RSI topside line on the weekly for the S&P 500 continues to be a level that has been giving us some guidance. And here we can see it is struggling to hold the RSI topside resistance. What that means is if this market is to go higher, we need a price breakout. We need the RSI to clear this RSI topside resistance. Now, as I mentioned last week, you can always get a pullback in price. But what determines whether you're going to get a major drop is what happens initially around this RSI 50 level. Now, of course, we know that we did bounce on the RSI 50 level here. We bounced here again. Even after some pullback, the market held and would go on to test new highs. So essentially what I'm saying is what the market does next is pretty much dependent on what happens around the RSI 50, if it gets there. So we can say that this is definitely a sell signal. It's what's going to happen around the RSI 50. In other words, if this market is to drop significantly, we would have to be trading below 50 on the weekly RSI. It pretty much would be visually similar to this area here, where we had this significant pullback late 2018. In other words, we won't know how severe this failed breakout is until such a time as the market comes back to test that RSI 50 level. So just to show you where the numbers are settling for the week. Markets down slightly, NASDAQ down. We can see a little bit more, down about a percentage point. Now keep in mind, we are going into the end of the month. By Tuesday, we're going to begin a new month. And that's going to change how the monthly charts look. And before we go take a look at the S&P 500 monthly, let's take a look at how the Dow did close at the end of the week. Down slightly, about 0.43%. It's not a bad pullback. And similar analysis to that of the S&P 500. We can see here on the weekly, a failed weekly breakout. And we can see also the RSI topside resistance line, something like that. And for the week, let's take a look at how the NASDAQ responded for the week. You can see as far as the NASDAQ is concerned, had not got back to the prior all-time weekly closing highs. So a little bit of a gap here to the highs. And we can see that the RSI topside still in play. Keep in mind, we did close slightly above RSI 50, Should we drop below 50 in the new week, expect there to be a relatively big downsized movement to the downside move to the downside, or big size move to the downside, I'm trying to say, blah, blah. And have to watch for that. If the market ends up coiling upwards, then that's good. As we know, with the weekly coming back to test the RSI 50, we can use the prior RSI 50 support with uniform action as good examples of what happens when a market holds the RSI 50. So yes, we are getting this pullback look, but what happens again is going to be what happens in terms of the next couple of weeks and months is what happens around this RSI 50. If the market trades substantially below 50, that would be good for a big down period in the market, similar to this period here where we're down below RSI 50. Now, go back to that S&P 500 monthly chart, and I'm just going to use the S&P 500. The key here is we have to be aware that as of right now, we are very close to this breakout level, and that can be used as a guide just to gauge what the market is intending to do. And of course, that level that we've been watching is the prior and the current confirmed all-time monthly closing high at 2980.38. So right now, struggling a little bit. Remember, it can always attempt again to break out in the new month. For now, it is struggling. Now, the key is what happens next month, the month of October, because we might still be within this area of resistance here. This area of resistance, if the market was to turn down in the new month, is a big deal. If the market turns negative in the new month and we are pointing down, that would be paying attention, or the market showing that it is respecting this area. You know, we've been watching this area pretty much for the entire 2019 calendar year, and that level is around the RSI 61.8. And just for the sake of those who are new, this is the area we've been watching. We know that if the market shows a monthly resistance at this level, that's a big deal. In other words, if we end up coiling back below this level, that's a major sell signal. And the relevance is because this is also where the market began major bear markets in early 2000 and late 2007. So early 2000 and around March of 2000 and 2000. So whatever happens here is a big deal. And we can actually even see that that same level became a great entry in 2013 here. Great entry in the market. So month to month, that's where I would pay attention. As long as the monthly charts are positive and the market is breaking out as far as the S&P 500 is concerned, as long as that breakout above 2980 is taking place, then this market should continue being positive and bullish. So as long as the market is showing positive monthly price action and holding above this level, then that remains a good and stable market. Turning down, looking down, showing that the market is struggling to hold above that area, prices pointing down for the month would be a major problem and potentially a major sell signal, because if the market retreats from current levels, we would also be faced with this positive improvement in prices with declining technicals. That negative divergence would end up being a major red flag. So what happens in the new month is going to determine a lot of the sentiment that we can use to consider whether to buy breakouts or not. Now, I could go on and spend time looking at millions of other charts, but pretty much for the most part, they are the same. Maybe what I can do is let's take a look at some of the major markets that I've been tracking for months. The Canadian market on the weekly, we can say, is also showing weekly chart challenges. If you take a look at the top side, Now, in terms of price, it is breaking out. So that is a good breakout. In fact, had a follow through last week. It's only that the RSI is struggling there. So similar to what the S&P 500 is doing. On the monthly chart, you can see there's a price breakout. And as I mentioned last weekend, even with a price breakout, the problem is we don't have the minimum requirements of the ultimate Muade breakout. This is missing. And of course, the reason is because the RSI and MACDs don't meet the minimum requirements of the ultimate Muade breakout. RSI not at 3-year highs or above 69.1. MACDs are not breaking out to 3-year highs. By the way, the similar look can also be seen with the S&P 500. So the quality of the breakout, as I've been mentioning week to week, is a problem. The MACDs are not at 3-year highs. And the RSI is not at 3-year highs, and neither is it moving above 69.1. Because of that, doesn't meet the minimum requirement of a quality breakout. And so the breakout was always going to be suspect. As we see Canadian markets and the US trading pretty much at close to all-time highs, not all markets in the world are trading close to their highs. For example, we can see the Indian market did come back to test recent lows in terms of the RSI support or break line, which held. And of course, it's been pointing higher the last 2 weeks. Now, it might be coming back to an area of potential resistance. If you consider the top side, not the best line, but there's a line somewhere there. And there's also another line, which is this recent breakpoint here. So that might also be suggesting that around here it might take some pause after a nice move. Of course, the key is the monthly chart, but let's take a look at the daily. And we can see on the daily, looks like it is aware of this level here with the recent double top on the daily RSI. Which has been giving us pullback areas. So if it's to move higher, it would need to clear this area to the upside. Otherwise, it looks like it could be setting up to pull back. But as you can see, it's not the worst sideways action after a big 2-day move. So it blasted in price recently. Just a huge reversal here. And now has been trading tight in a tight area. So of course, a breakout is what the bulls want to see, and movement above this RSI resistance line on the daily. And of course, let's not forget that the monthly chart is also coming in play. As long as the monthly is holding above RSI 50, that remains solid and good. Now, the new month should determine a major direction. As we see all these markets, net, we can see that as long as this is holding the RSI lows line, that should still be a decent market. At some point, you have to be aware of downside possibility if and when the RSI lows line breaks. And I should point out here, one of the reasons why, if we take a look at let's go back to the shorter monthly chart and take a look at, let's look at 5 years of monthly data. So one of the reasons why this breakout here was suspect, if you go back a couple months, is I was talking about this area here. We saw nice price breakout. So the price breakout was solid. But there was a problem, which is the same problem we see with some of the world markets like the S&P 500 and also the Canadian market, is while prices were breaking out early in the year, the MACDs were not at 3-year highs. So this is this area here. The MACDs were not at 3-year highs, and the RSI was struggling to hold above 69.1. So that look was good enough to kind of kill the breakout, and now we are pretty much having to reset again. The new breakout level is higher, which is somewhere around there, just under 11,900, somewhere in that range. So the quality of the breakout was not there during this move, which led to this pullback. So pretty much in a sideways market here, I would say, until we either get a breakdown or a breakout with quality. Of all the markets that I follow, the Brazilian market is the one that is showing the best quality. You can see here a fresh price breakout after 1 month of rest. The RSI is trading above 69.1, which is a sign of quality and strength and momentum. And at least one of the MACDs, which is our minimum requirement, one of the MACDs is trading at all-time highs. So this definitely meets the minimum requirements in terms of the RSI being above 69.1 and the MACDs being at all-time highs. So that's pretty much, I don't know that I know any other market that I track that has a similar looking bullish chart. So this might be a reason why other markets might just be stable to bullish, as long as the Brazilian market is holding at such lofty levels. And again, as long as the RSI is holding above 69.1, this remains a decent market and a stable market at that. Take a look at the biotech space, and it is showing some struggle here. Now, is it definitely a sell signal? Well, depends on whether it continues trading this with this down and a break move. Depends on whether the RSI continues holding to 3-year lows. That's not a good look unless it can recover and hold above 2019's monthly closing low. As long as prices are below that level, not good. We can take a look here and we see that the MACDs are not the worst, to be honest. Close enough, but if this is going to be a major break in the biotech space, the MACD would have to move to 3-year lows. Now, let me give you the exact opposite look, which is the ETF I sent you as a breakout alert, which is BIS. And let's take a look at a 3-year monthly. So the buy point based on May's monthly closing high at 20.34. It needs to clear that price level if this is going to be a true breakout. And we can see here, as far as the minimum requirements are met, we see that the RSI is moving to 3-year highs. And we see that the MACDs are trading at 3-year highs. So just needs to break out and hold above 30.34. If that happens, that means the biotech space is going to be struggling as we go into the close of the year and probably even beyond. So 30.24 for BIS is the buy point. It needs to be above that level if this is going to be giving us a strong bullish move to the upside. And if the biotech space is truly breaking down, 20.34 is the level to watch. If you take a look at the XLF, not the easiest one to read, but if we take this area here, somewhere there, and we just kind of ignore these extreme areas, for the most part, we've been trading in this area going back to 2017. In fact, if we just go there, so we can say ever since this breakout here, we pretty much, since that breakout there, we've pretty much been trading in a range. Let's call it between 20 28 and 24.50 for the most part. Like, that's why I'm saying it's not the easiest chart to read. It's in a sideways and has been in a sideways range for quite a while. Even recently in 2019, been trading in this area if you consider the monthly closing high and lows. So not the easiest one to, it's not giving us any momentum guide in terms of downside move or upside move. We take a look at the Semiconductor Index, and here we can see net, just like we see with the S&P 500, a failed breakout. And as long as that's the case, then we can anticipate, or at least understand, that this market is not demonstrating the strength. It is showing that it can move higher, but it hasn't yet broke out or closed above the prior 2019 monthly closing high. So again, we can see we are kind of in this box range here. But we're seeing a series of failed breakouts, which is not good. Is probably not a good sign, especially if we end up turning negative in the new month and we start pointing down. Now, if we take a look at the IYR, we can see that as long as the RSI on the IYR is holding above 69.1, this remains a bullish to stable market. Now, we did see the other area of the market that was breaking out, which is a TAN. At some point in the month of September was trading above 69.1. Since then, we've seen a major reversal and now back below 69.1. In fact, a big drop. This is not looking good with this failed breakout. Now, it might change if we end up moving above this recent monthly closing high. In other words, by Tuesday, the new month might bring a new perspective. If we end up breaking out, that might actually be bullish. Similar to this month here, where we have a reversal lower, and then we break out and stage a multi-month move to the upside. But right now, not looking good in terms of this RSI 69.1 rejection. So I would say if you are owning those breakouts, then you should have been stopped out or just about to be stopped out. That doesn't look good in my opinion. Of course, a breakout next month will change a lot of things, again similar to this period here. In other words, if anybody sold here, the market did turn around and break out, and it's the breakout, the next breakout is where we would turn bullish again. Right now, you can't be bullish in this sector until we see a fresh, successful breakout. In fact, as a good example, here we can see what happens when an instrument fails to break out successfully. Failed here, here, closed higher here, but ultimately big failure and had a major drop. So until we see a new breakout attempt, the solar space is looking very suspect in my opinion. In fact, we can see this on a weekly chart, where we see that this week was a major break of the prior weekly closing high. So last week we closed nicely above the breakout level. This week we've just collapsed. That's a failed breakout, not a good sign. We have RSI 69.1 rejection. We have also negative divergence. Prices went higher with a declining RSI strength. That negative divergence is not a good look. So net, until we see a fresh monthly breakout, the solar space is not looking good. And we can see here on the monthly, the possibility that it is forming resistance on this top side resistance line. I drew it a little bit higher, but if this ends up looking like this and starts coiling way below this red line, that's a bearish reversal look. And we can see here, you can also draw it this way. So this line here represents some interesting perspective. It's an odd line, but that helps us understand what is going on here. We had a break below the line somewhere here. We had a couple of resistance levels here in 2018, and now we've gone above the blue line and back below it. So You know, it needs to be above those two lines if the solar space is going to be back in play. For now, doesn't look very good. Now we see that as of right now, gold is back below 69.1. Not a good look at all. What could change this and turn positive is the new month. If we, after this down month, if this is confirmed as a down month, if we end up moving back above the recent monthly closing high, in other words, a fresh breakout after one down month or more, is actually a good thing. In a sense, visually it would be similar to this pullback area here. Ultimately, it set the stage for a great momentum breakout here. So sometimes a pullback is necessary to reset, is the point. But right now, this doesn't look good because it is back below 69.1. Not a good look, especially if we take a look at the long-term monthly chart. One thing I've been pointing out is the backtest line. If you draw it like that, this is not good. You can see we've gone above the blue line and back below it with uniform action. That's a major reversal area. As long as that's the case, also we can actually go back to the 2011 break here, and that was a major break at the time, because we haven't been back to that price range from 2011. And we take that line and draw our uniformity resistance line, something like that, and you can see if this ends up being uniform activity above the red line and back below it, that also is going to be a major sell signal. So a fresh breakout is needed here before we can start looking for new entries in the metals space. Take a look at GDX. Again, failure to break out above 2016's monthly closing high is not a good look. We can also see that if we take this area here, which actually does correspond with a breakpoint here, and that breakpoint was instrumental in this movement here before a major drop zone. So we've come close, or we came close here for the monthly closing highs right there. Close enough there for this monthly closing high. Resistance here for this monthly closing high. And now we've gone above the line and back below it with uniform action. Also 69.1. Uniform activity rejection, as I just stated. You combine all those, it's not a good look. What can change this picture is a fresh price breakout above the $30 price mark, somewhere around here, above that 2016 monthly closing high, and RSI would have to be above the red line and above RSI 69.1. So for now, not a good look. We take a look at silver, and again we see, after giving us a fake breakout, I believe last week, now it is reversing. Really, there's nothing anybody can do about this. You have to play what you see at the time you see it. So right now on a monthly scale, it is now back to showing this resistance point. So the only thing that can change here, frankly, is a price breakout above this recent monthly closing high. If it can break out above this monthly closing high in terms of price, if the RSI can clear this red line, that might set the stage for a big move higher. In other words, if I was to explain that a little bit, if you go back on this red line here, on hindsight, we can see uniform activity rejection here for the highs. But more importantly, why it needs to move above the red line is because we can see that when we broke out here, which is this period, the ETF or silver had a major run. So we can see in the current market environment, we need a breakout and movement of the RSI above the red line to set the stage for a potential move higher. Right now, doesn't look good at all. And as I've been stating, the dollar and gold are pretty much close to recent highs, which is unusual. And more importantly, right now, we see the dollar back above 69.1. So between gold, the metals versus the dollar is showing strength because the RSI is above 69.1. The longer it stays above 69.1, the stronger the move is going to be. And if we take a look at the monthly chart based on UUP, the ETF that tracks the dollar movement, we can see price breakout early in the year, a couple months ago, I should say, and now clearing recent weekly closing highs. RSI is jumping above 69.1 on the monthly, which is good. And at least one of the MACDs is trading at 3-year highs, if not both of the MACDs. So we can see here, this is moving to 3-year highs. And the other MACD is already at 3-year highs. So definitely, this does meet the minimum requirement for the ultimate Moate breakout. So the dollar is looking good, is what I'm trying to say. As long as the RSI on the monthly is breaking out above 69 and holding above 69.1. And we can see on the weekly, after a couple weeks of sideways action, it is moving above the recent weekly closing high. So as long as the monthly meets the minimum requirement and then a fresh weekly breakout, this is good for the dollar. Again, the net takeaway is the dollar is holding above 69.1 on the monthly, which means it should continue being strong. Take a look at USO, which tracks crude oil, USO. And you know what? Again, we are still in this range. In fact, if we take the weekly closing high here and a weekly closing low over the last couple of months, going back to May, we've been trading in this range. Not the easiest one to read, and it's been like this for many months. It goes up, goes down, goes down, goes up. So not the easiest one to read, and the RSI on the weekly does also give us this wedge where we have top side resistance, potential bottom side support. I would speculate the big move comes eventually if and when we break out above the top side resistance line on the RSI to begin a price move higher, or if and when we break below the wedge for a big move down. Right now, I would really be pushing it if I try to understand this box. It's been in that box for many months and continues to be in that box. Not the easiest read, I have to admit, for myself. Quick look at Bitcoin. Pretty much which is going to be the same analysis for the total crypto market. But we can see that it's down substantially for this week, trading around 8,000. And go back to that weekly chart, and the level that we had set for potential break level was here. And it did go, because remember, for a while we were trading in this box, and now we've broken below that area. That price range that we were watching, that it broke down, was at I believe it was 9519. Now, so what I can say from a day-to-day perspective, Bitcoin should continue trading down or sideways to down. In other words, should be trading with a bias, something like this, as long as the daily RSI is trading below 30.9. As long as the daily RSI is below 30.9, that just tends to be an area where instruments are very weak. And since it's a daily chart, it should be like this for a couple of days. Even with the movements higher, as long as the daily is below 30.9, expect the cryptos as a group to be struggling. A quick look at the monthly. And we can see that some of the things that we were looking at many months ago and looked like Bitcoin was above those price level, the RSI level actually, looked like it was moving above the RSI level, and it's this level here. Go back when Bitcoin was doing very well in the for 2019, somewhere here, looked like we were trading above the black line on the RSI, but guess what? Over time, it developed into a uniform activity resistance area, and we see this major reversal down since then. So day to day, I would watch that RSI 30.9 level, because as long as it's trading below 30.9, the risk is always going to be to the downside. And a quick look at the total crypto market as calculated by TradingView. So this is the entire captures the trading range for the total crypto market. We can see again, as long as the daily RSI is trading below 30.9, this remains a bearish area. Prices should be sideways to down as long as we're in this area. In other words, the only way to correct this is by prices moving, by RSI coming out of this 30.9 trap zone. Now remember, this is exactly opposite of what happens when we trade above RSI 69.1. Whenever we trade above 69.1, the bias is to the upside until you break back below that RSI level like we did here. That requirement is understanding that setup or requirement for momentum either to the downside when you are trading above 69.1 or to the downside when you are trading below 30.9. Just understanding that does help you know what to expect in terms of price range and momentum. So right now with the RSI below 30.9, prices should be sideways to down. I'm going to stop right there and let me leave you with the current market, the close for the day. This is Eric Moa with Mother.com. As always, good luck, peace, and blessings. EACS.